With Dow 29,000 in sight, let's check on some of the most important technical levels we should be watching. Joining us for that is Katie Stockton, founder and managing partner at Fairlead Strategies. I've just mentioned the Dow, but last time you were on, I don't know if we had a down day. Maybe we have, but
doesn't feel like it.
But the S&P is the place you were watching, and there was a specific number, and you said something big. We're closing in on something that could be important.
The level is 3280, and that's actually a long-term measured move projection from a breakout that we saw in 2016. It looks like we'll get very close to that today.
4 years ago?
Isn't that wild? I know. So finally, here we are, right?
And you said
so ceremonious. 3280 has been the target really for years now. And of course, with it now basically having been met, we can assign a new upside target.
No way. I love it when a plan comes together.
Right?
So this is it.
It's done it. So we obviously have a very well-established uptrend. The way we do it, we look at the rally into the last corrective phase here, and then we project it higher. It's very simple. It assumes the trend will maintain itself, and it can get the market to about 3475. So that would be a sort of a 6 to 12 month target for the S&P 500 based on that process.
So that sounds like it would confirm the average strategist's high single-digit return for.
That's exactly right, and off to a strong start, of course.
So technicals matching up with fundamentals. That makes me.
Isn't that nice when that happens?
Not really. It makes me uncomfortable. Because I don't know. Okay, what else? How about retail?
We can talk about retail, of course, on back of the jobs data. We had underperformance, of course, in 2019. This is XRT, or the Spider Retail ETF. Notice here we had a long-term trading range established. Within that range, we're sort of overbought and due for a pullback. So I think broader retail should pull back. But you see this pink line here. This is the 200-day moving average, and it shows support not too far from current levels. So I think a pullback, higher low, and then a breakout from this range, which of course would be a big deal for retail. When you take a target from a range, you kind of look at the width of it and project it higher. So that would be a big deal for retail.
As far as a secular trend, one stock has had more to do with what's happening here than any other, and that's your third thing to look at.
And Amazon is a holding within that ETF, but a small one. And here it is. I think it's really one of the FANG stocks that stands out to me as having good technical upside potential, long-term uptrend, of course, higher low very recently, and within that we've got a nice triangle formation and a breakout above the 200-day moving average not shown here. So that breakout presents a catalyst that's intermediate-term momentum-driven, and I think we'll see new all-time highs above that resistance level, which is about 2050.
So still don't short it? What if I shorted it at 500, then I shorted it at 1,000, then I shorted at 1,500, then I shorted it at 2,000? It's still not a short?
Still not a short. I never recommend shorting stocks in long-term uptrends like this. You have to have like a 2 to 3 week time horizon if you do that kind of thing. A little overbought short-term maybe, but a pullback to that 200-day would be very welcome.
Going to 3,000?
It could on that breakout. A triangle is very high probability. So if we see the breakout to new all-time highs, I wouldn't rule it out. Not this year, though.
All right.